Hello, it's Cameron here. I'm just going to make another video covering a few bits on the financial markets. I've been very busy the last 2 weeks. I've had so many interviews. I've one today, tomorrow. I've got one on Monday, and then an assessment centre on Wednesday. So it's really been kind of touch and go at the moment. So apologies if I haven't made a video that quickly. But anyway, so the inflation figures for the States came out yesterday evening, and it was 8.5%, which was lower than most people were expecting. And I think that kind of decrease came a lot from the sharp decrease in the price of fuel, as you can sort of see here, moving towards $4 after peaking at $5. Yeah, pretty self-explanatory. Fair. I mean, it talks a bit more about Russia's invasion and stuff, which I mean I've talked a lot about before, and I'll touch a little bit on later. But what I mainly wanted to talk about was this: it's the Inflation Reduction Act. So well, yeah, I thought this was quite interesting, mainly because, well, I'll say my opinions on it. So, like, a lot of the spending in there is towards is like climate change and green energy, that sort of thing, and increasing spending there. And I think it was what was it? It was $390 billion coming into the economy from it. Um, from what I've learned throughout, and I think what basically everyone who's done economics has learned, that is, if inflation's really, really high and you want to bring it down, the last thing you want to do is inject money into the economy, right? That's like, this is just, you don't want to be doing this, what is essentially quantitative easing, when the economy is like this. So, well, when inflation's high. So it kind of confused me exactly why it's called the Inflation Reduction Act. Didn't really make sense at all. Just putting money into the economy, and I'm a big fan of green energy and all that, but I don't think now's the best time. I mean, yeah, the inflation figures came in a little bit lower, but I think it passed through the Senate like the other day as well, actually. So I think it looks quite likely it's going to come in. Um, but a few people who like sort of look into this stuff a bit more than me, they were looking at what the Inflation Reduction Act's actual effects on the economy would be. So, or regarding inflation for the Inflation Reduction Act. So you can see it won't have an impact on GDP by 2031. Obviously, that's like green energy and stuff takes, I think, a while to actually sort of come to fruition. Um, but this is the key bit I want to talk about, that inflation, it's actually going to very slightly increase inflation until 2024, which is why I don't really understand why it's called the Inflation Reduction Act. I think it's probably mostly due to it's like just politics, and it's the midterms. So they want to appear like they're doing something about the economy, similar to my last video where I talked about why they weren't calling the recession that the US went into, why they weren't actually calling that a recession. Um, but yeah, yeah, that's what I think about that. If we move onwards, yeah, something else which came out along the lines of inflation again was that the labour market added like loads of jobs. Yeah, so like more than double the number of economists as expected. So I mean that's again, I thought it was going to hurt inflation a lot more than it did. Apparently, I mean, inflation's still at 8.5%, so it's still quite high, but it definitely dropped more than most people were expecting. Um, so yeah. Then now I wanted to move on quickly. Yeah, so here's the quick graph of the inflation. So it's gone down back to 8.5. I think most people were saying that it has peaked in June, and they expect the market to sort of be a bit calmer over the next couple of months. But yeah. Um, oh yeah, so this was something I found interesting. Was an official bull market is a period where the S&P increased at least 20% after two distinct declines. So I mean, I saw the S&P was I think it was at 15 from the low, as far as I was aware. But yeah, so that was at 15.35, and then if we look at the Nasdaq, it's actually, I think it's come up 20% now. So yeah, so that would be, I guess, a bull market in the Nasdaq, not a bull market overall. But yeah, next, quickly, just wanted to touch on oil prices. Wasn't that one? Yeah, there we go. Yes, there is. So oil, it's sort of just above 90 at the moment, so at 93. I think it did drop below 90 the last couple of days, if I'm not wrong. Because a lot of my portfolio is in energy and oil. I have been rotating a little bit of that out into some of the sort of growth stocks. I think I had a little bit of NEO, some other sort of bits and bobs. Um, And the main reason for that is that I think like all obviously did quite well at the start of the year, but I think most of the positive catalysts are kind of um, going away a bit. Like I think the Iran deal is going to come through. I think the situation with Russia seems to be calming down a little bit, and then also what's one more point? Yeah. Oh no. On the other side of it, the reason why I'm still keeping some of it in is because like winter's coming. Game of Thrones there, but winter's coming, so obviously people's energy use goes up as it's colder. So I think yeah, that's why I'm still keeping a bit of it. I mean, I think my main holding in CVE is I think it's done well the last month or so, but it did get crushed a little bit from sort of it was there to there mid July when it wasn't doing too well, but it seems to be trading sort of across now. But yeah, sorry if this is a bit. This one's been a bit all over the shop. I've just had so many interviews. I'm so busy, so I've still been trying to keep up with stuff a bit. But yeah, thank you very much for watching, and see you later.